All right, let's jump right into this explainer. Today, we're tackling a massive frustration that so many of you, really dedicated, focused learners, face in the markets. We're pulling some fascinating insights directly from recent discussions on trading psychology. Honestly, if you're sick and tired of putting in the effort, studying your heart out, and still staring at the exact same red numbers in your portfolio, this is absolutely for you. We're going to unpack exactly why that happens, and more importantly, how to fundamentally flip the script. Which brings us to the million-dollar question, right? Why do you keep losing despite knowing the charts inside and out? I mean, you've taken the courses, you know the candlestick patterns, you've drawn the support and resistance lines 1,000 times, and you've spent the hard-earned money. Maybe you've been at this for a month, maybe 6 months, or maybe even 3 years. You've taken the losses, watched endless tutorials, and yet the bleeding just doesn't stop. It feels like hitting your head against a brick wall. So, moving into our first key area, beyond charts and candles, or really the myth of technical analysis. Listen, we've got to fundamentally debunk this idea that just learning one more technical pattern is going to save your portfolio. It won't. The source material makes this incredibly clear. This game, it's not about charts or candles or trend lines. The whole shebang is an entirely mental game. It is about the deeply ingrained mental behavior that dictates the exact action your brain is going to take when you are thrown into a high-stress, high-stakes situation. Which leads us to a pretty wild concept: wired to lose money, also known as the trading paradox. Think about this thought experiment for a second. If you took a blindfolded kid, sat them at a terminal, and just had them randomly hit buy on a major bank stock, they mathematically have a 50% chance of making a profit and a 50% chance of taking a loss. Period. Even if you factor in things like slippage and brokerage fees, that kid still holds roughly a 40% chance of winning based on pure dumb luck. But then, look at the grim reality for educated traders. People who actually know the charts. Market data consistently shows that over the long haul, a staggering 90% of traders lose money, while only a tiny 5 to 10% actually pull a profit. Just think about that. A game that is theoretically 50-50 gets skewed to 90-10 against the educated player. Technical analysis simply cannot account for that massive catastrophic discrepancy. So what is actually happening here? Well, the crucial takeaway is that this 90% failure rate exists because our brains are literally biologically rigged to make terrible decisions under pressure. By default, human behavior in these specific financial pressure cookers is perfectly primed to make you a loser. The market triggers our most primal survival instincts, and those instincts scream at us to take actions that actively destroy our accounts. We all share this exact same default programming. And hey, this isn't some modern glitch caused by blinking red and green numbers on a screen. Take the ancient Indian epic, the Mahabharata. During the infamous gambling match, the characters make horrific, completely self-destructive bets in the heat of the moment, literally betting their own family members. The source astutely points out that if you asked those exact same people to make that bet a day later or a week later while sitting calmly with a cup of tea, no way, they never do it. The default human brain has always made catastrophic choices under the spell of real-time pressure. So when you're watching a trade go against you, your brain is mimicking that exact same ancient panic. Okay, let's pivot and talk about the direction of growth, moving forward versus moving backward. See, most of us think profit means forward, loss means backward, and breaking even, well, that just means you went nowhere. Actually, scratch that. It's a massive misconception. According to the analysis, surviving the zero-sum game of the market at break-even is serious growth. If you spend a whole month trading, battling the market every day, and you end up exactly where you started, you haven't wasted your time. You've successfully defended your capital, faced the ultimate fast bowler, and protected your wicket. You are strengthening your psychology simply by surviving the arena. Now we're getting to the core of it all: comfort versus discomfort, the ultimate binary choice. Here is the absolute reality. Growth only happens in the direction of discomfort. Look at how these two sides stack up. On the left, we've got comfort, which is exactly how the masses operate. Comfort is taking a tiny, insignificant profit just because you're terrified it's going to disappear. Comfort is clutching onto a massive, bleeding loss because accepting it hurts your ego too much. Comfort is revenge trading. Now look at the right side, discomfort. This is the 10% winner's circle. Discomfort is forcing yourself to hold a trade all the way to its target, walking away completely after a bad loss, and strictly maintaining your position sizing even when you feel absolutely invincible. Because every single time you choose that comfortable action, you are actively hardwiring your brain to stay permanently stuck in that losing 90% bracket. You're taking that flawed default human psychology we're all born with, and you're just pouring gasoline on it, making it stronger every single day. So how do we fix it? Let's look at reprogramming your brain by actively choosing discomfort.
The source material lays out a super practical exercise for this. You need to sit down and create a physical list, literally write it out of your own personal default reactions. Identify 7 or 8 specific moments where your immediate gut instinct perfectly matches the losing psychology of the crowd. By having this list in front of you, you can catch yourself in the act. For example, if you have a massive winning day, the comfortable instinct is to double your position size the very next morning. Because hey, you feel like a market god, right? The uncomfortable, growth-oriented path, forcing yourself to keep the exact same position size.
Let's actually walk through how this plays out in real time. Say, step 1. You take a loss that stings. Maybe it went a little beyond your risk capacity. Step 2, the comfortable urge hits you like a truck. You want to fire off 10 more trades, maybe gamble on some out-of-the-money options just to make that red number a little smaller. We all know how that movie ends. You blow up the account. Step 3 is the vital pivot. You have to choose the severe discomfort of shutting off the screen, swallowing your pride, and saying, I will deal with this tomorrow. That single painful action in step 3 leads directly to step 4. You evolve. Your psychology gets tangibly stronger. Which brings us to our final and honestly our most brutal question from this explainer. Our default brain hates sacrificing anything. We see a small bit of profit and we grip it so tightly out of fear that we completely miss the massive moves. So ask yourself right now, are you truly willing to sit there, endure the sickening anxiety of watching a comfortable profit fluctuate, and risk it entirely to secure the uncomfortable, outsized win of a top-tier trader? Because until you can actively choose that discomfort, the charts, they simply won't matter. So, what's your next move going to be?